Now guys, I'm going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now on the weekly chart, all of the technical indicators are bullish. And if you remember that last week the MACD, it was bearish, okay, but this week the MACD is bullish, okay. This means that all of the technical indicators are bullish, okay. So I will discuss all of these things on the weekly chart, and once again weekly chart is the big picture, okay. The second point of the agenda is the FOMC minutes of the meeting, so Federal Open Market Committee minutes of the meetings, okay. So here on this the Federal Reserve website, I will show you that what the committee members, okay, they were expecting and what are their views for the coming meeting, okay, and what exactly these the market movers, the news channels and the influencers, they don't want you to know, okay. And you might not have seen or you might not have heard about these the important things that were mentioned in the Federal Open Market Committee, these the minutes of the meetings. Now the third point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, once again everything is bullish, okay. However, there is now a problem is because of the overbought condition, but this overbought condition, it was already there, okay, for last few days, okay, it was already there, but now it is extremely heavy, okay. So that is another reason why we are anticipating a reversal. So last point of the agenda is the probable movement of the entire US stock market from November 27th to December 1st. So when I say entire US stock market, this includes S&P 500, Dow Jones, Nasdaq and their respective ETFs, etc. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So if you want to join my Patreon community, then I've given the link in the description of the video and also the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. This is the weekly chart. Weekly chart means one candle represents 1 week, okay, not 1 day or 1 hour. Now if you look into this, the last candle, it's a bullish candle, a good weekly bullish candle. This candle is the first, second, third, fourth, okay, fourth in a row, 4 continuous bullish candle or continuous heavy candles. Also this candle has clearly breached the previous high, okay, that was there in the last week of August, and now the closing of the candle was approximately at 4560, okay. However, the most important part here is that the closing of the candle was below the trend line. What was the trend line level? It was 4562. And in my pre-market update on November 21st, okay, that was Tuesday, I have cleared the logic of 4562 level, okay, in very detail, that what the 4562 level is, what will happen. This is the trend line level, that now any upward movement will be very much confined, will be extremely very limited to or around 4562, okay. Although there is a next level, okay, a few points above this one, okay. So because of this, the very high or extremely heavy momentum, extremely heavy bullish momentum, we were expecting that the S&P 500 has the potential to breach 4562. However, any breach of 4562 will be extremely limited. Extremely limited means by a few points, and then again it will be, means again and again it will hesitate to move up, right? So because the closing of the S&P 500 was at 4560, whereas the trend line level was 4562 for this the previous week, this means that there is a rejection. What? A rejection. In technical terms, okay, we consider or we call it as rejection, as simple as that. This means that although the candle is bullish, candle is a good bullish candle, however this candle was rejected from the trend line, okay. This means that whatever the bullish sentiments were there, these bullish sentiments will either dissipate or will be less or will be little less or anything that is not strong, okay. Yes, one more thing, that this candle does not confirm any gap up open or any specific gap down open, okay. Gap down open, it may happen, however chances are again, because 1 2 3 4, okay, 4 weekly bullish candle in a row, okay. This means that overall there were bullish sentiments even at the time of closing on a Friday, there were the bullish sentiments. Okay, so generally whenever there comes a rejection, then there comes a gap down open. Okay, and then there comes a reversal. But because of this, the extremely heavy bullish momentum, okay, the entire stock market, entire US stock market is still holding. Okay, neither bullish nor bearish, that kind of thing. Now let's see what other technical indicators are saying or telling us about the weekly, this S&P 500. As of now, proper, okay, there was slip, a bullish slip that confirmed, okay, a bullish movement. Okay, other than that, yes, recently this was the important thing, that now the MACD has, okay, we have seen that the MACD is now turned bullish. Okay, last week, until last week, it was trading bearish, but now it is bullish. Okay, other than that, all of the technical indicators are bullish. Okay, on the weekly chart as such, there is no saturation, but if there comes, okay, this I will be able to confirm only on Monday, once the stock market opens, once the S&P 500 opens, because as of now the stochastic RSI is in a condition that if there comes even 1 point upward movement, just even like 1 point, means S&P 500 closed at 4560, if there comes anything that is above 4560 even by 0.01, okay, then also I strongly suspect that the stochastic RSI will hit the absolute saturation on the weekly chart. It is already saturated on the daily chart, hitting the saturation on the weekly chart. Okay, so means there are a lot of factors that are pointing out, that are pointing towards the reversal. Okay, so this, whether the stochastic RSI will hit absolute saturation or saturation on Monday, okay, I will confirm this thing in the first update once the first hourly candle forms, okay, to my Patreon community members. Now, so as of now, okay, it is clear that technically S&P 500 is 100% bullish, but at the same time, okay, S&P 500 has faced a strong resistance and it was rejected on the weekly as well as on the daily chart, but the weekly rejection is it is more important. Okay, now there is one more important thing that is there in the Dow Jones. Dow Jones, the approximate level for the trend line was it was 34,420. Okay, plus minus a few points, that's fine. And if you notice, Dow Jones hit the high that was 34,400, because Dow Jones gives movement by 200-300 points. Okay, so 10-20 points, okay, it's not a big deal. So this was the approx number. However, the real number was somewhere around 35,416 or 415. Okay, that was the trend line level. So it was clear. Okay, this was my final update to my Patreon community members yesterday before the closing of the stock market, that if the S&P 500 and the Dow Jones both are closed in this manner, means rejection from trend line, then there is 90% probability of a reversal. Why 90%? Why 90% and why not 100%? The reason is that recently we have seen that the entire USA stock market has given unjustified movement. Okay, so that is why I'm giving some space, some room to that, okay, through the 10%. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the Federal Open Market Committee minutes of the meetings. Okay, so here let me show you. Okay, on 21st of November, the FOMC minutes of the meetings were published. Okay, and on 21st of November, we have seen a very little and very limited movement. First of all, there was a gap down open, and then there was a very limited movement. But the beauty of this, the movement on 21st of November was that the S&P 500 came down, hit 4,526, and then it retraced. So what is the zone? The zone was 4,527.37. This is the zone, and then it closed at, surprisingly, it closed at 4,538, and my number was 37. Okay, so it came down 1 point, okay, below this, the number that was 4,527, and it closed just 1 point above the 37, and that is why, okay, there were chances that the S&P 500 can still hold. So now I hope guys you can see yourself that how sensitive my levels are, and closing above or below my levels even by just by 1 point, okay, it matters a lot. Okay, now let's discuss the FOMC minutes of the meetings, okay, and what was the most important part there, and what these news channels, market movers, market manipulators, they don't want you to know. Okay, so the first point was that the federal fund rate was at or near its peak and would be held there at least until the June 2024 FOMC meeting. So what does that mean? This means that there will be no rate cuts at least until June 2024. Now let me show you the same through this document. This is the Federal Reserve website. You can visit the website, and there you will find the FOMC minutes of the meetings. So this is the Board of Governors of the Federal Reserve System, okay, website. Okay, and attendance and all the Fed chair and all other, okay, FOMC members were there. Now the first point that I've discussed here, okay, the first point was that the federal funds rate was at or near its peak and would be held there at least until June 2024 FOMC meeting. The second thing that they don't want you to know is that there was a roughly 30% probability, 30%, not 5-10%, 30% probability of a 25 basis point increase at either the December or the January FOMC meeting. And in the same document you can see that there was a roughly 30% probability of a 25 basis point increase at either the December or January FOMC meeting. This looks valid, okay, if the situation demands. So again, no news channel, okay, or hardly any news channel or news websites, okay, or the influencers, okay, they might have pointed out the 30% probability of a 25 basis point in the December or in the January FOMC meetings. Okay, however, what you might have seen or heard through these news channels, that now the Feds have reached to its peak, okay, the interest rates, okay, its peak, and there will be no more rate hike. Okay, this is what they are saying, but in the document, okay, this is documented by the Feds themselves. The increase in longer term treasury yields appear to be mostly attributable to higher term premiums as stronger than expected economic data. Remember, okay, or just focus on this thing. As stronger than expected economic data seemed to increase the uncertainty regarding how long policy rates might need to remain high. Stronger than economic data, what does it mean? This means the inflation. So now what we have seen, stronger than expected economic data seem to increase the uncertainty regarding how long policy rates might need to remain high. This means that the Feds are in a very much comfortable situation or comfortable position, okay, and they are not in any kind of hurry, okay, for any rate cuts or so. That is why they are saying June 2024. Before June 2024, there will not be any kind of rate cuts. Risks around the inflation forecast were seen as skewed to the upside, given the possibility that inflation might prove to be more persistent than expected, or that additional adverse shocks to supply conditions might occur. So what does this mean? The European Central Bank, okay, the UK Central Bank chief, okay, and the American Central Bank chief, all of them, okay, they are saying that even though the data that the data looks promising, convincing, but they do not want to make the same mistake, okay, that the US Federal Reserve made, okay, back I think 30 or 40 years ago, okay, when they prematurely went for the rate cuts, and that actually pushed the economy into stagflation. That the Feds are in no hurry and they do not want to repeat the same mistake. This means that the Feds will wait until the data is consistent for some good period of time, and that is why the Feds have given us the deadline of June 2024, that in the meeting of June 2024 it will be decided whether the Feds must go for or should go for any kind of rate cut or not. But before that, no. Now another thing is, some has mentioned and some has not published this news, that the participants, means the FOMC, Federal Open Committee members, okay, they continue to view a period of below potential growth in real GDP, below potential growth in real GDP, and some further softening in labor market conditions as likely to be needed. See, likely to be needed to reduce inflation pressures sufficiently to return inflation to 2% over time. So, this was mentioned in the participants' views on current conditions and economic outlook. So as of now, what the Wall Street is expecting? Wall Street is expecting extremely high spikes in the GDP. Okay, very heavy upward movement in the GDP. But what the Federal Reserve, these the central, okay, bank, these the members, and what they are expecting? They are expecting a below potential growth in real GDP. So the views of Federal Reserve and the committee, the FOMC, these views are against the Wall Street. Wall Street is like this, Federal Reserve Committee is like this. So my final comment was that the FOMC minutes of the meetings are either bearish or neutral, but definitely not positive. It translated into the movement in a way that you can see that when the FOMC meetings were published, since then the S&P 500 has moved up by 0.50%. So when I say manipulation, then it just doesn't happen directly from one person. It happens through the broad network of persons, institutions in different forms to reiterate the same sentiments in different forms or through different channels to achieve a common goal which is set by a few. So guys, I hope that now you are very much aware of that what was there in the FOMC minutes and how the market, okay, these are news channels and everyone has covered this the news. What were the views of the Feds, the FOMC members, and what were the views of the Wall Street? These are market manipulators, these are news channels, and everyone. So guys, let me quickly cover this, that this is the S&P 500 or the stock market knowledge transfer program. And through this the program, it is the movement, hacks, strategies, trend, analysis, manipulation, technicals, prediction, each and everything in order to make you self-reliant. So I have given the details here, okay, but this is very brief. And this the Google spreadsheet that is there. This Google spreadsheet contains the detailed information about the program, what it is, what is going to be covered, each and everything minutely, options, okay, future market, the real-time calculation of options, predicting the movement, okay, and understand the traps, okay, and how to deduce the trend in the trend of the entire stock market or any stock, okay, or any index in advance, okay, each and everything. These are the short term, long term, intraday, okay, hacks, means in order to predict with 99% certainty that if one event has happened, okay, in this manner, then this will be the next thing that is going to happen, and 99% that will happen. And these are the levels, level 1, 2, and 3, okay, sessions are there. This is my email address, okay, whenever you want to participate you can simply drop me the email. These are the important terms and conditions, okay, that the program is not about any funds access or the account access now, okay. It just this is the knowledge transfer program. These are the screenshots of the people who have earlier participated in the program, okay. So I have given the link in the description of the video and also in the comment section. You can take a look. Other than that, this is my email address. Whenever you want to participate, okay, please feel free to send me an email, and or if you have any question that you want to ask, then again you can simply drop me an email. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily updates or daily analysis of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart means that one candle represents one day, okay, not 1 hour or 1 week. One candle means one day. If you look into this, the last candle, it's a very small candle, and I think the S&P 500 has gained plus 0.06% on Friday. There was very extremely limited movement. Okay, and this is what we knew, that the upward movement, no matter what, okay, it will be very much limited to the trend line, that is 4562, and there is one more level that is there. Okay, so this, the upward movement will be limited to that level. Okay, whereas the downward movement, it is conditional. Downward movement will also be limited, very limited, unless, so there is a small zone. So there is a small zone. So unless the S&P 500 gives up the zone, there won't be any fall. This means that for the entire day, the S&P 500 will keep on trading in between these two levels, just like this one, this one, this one, this one, or previous ones. Okay, so we knew these are two levels, that for the entire day S&P 500 will keep on trading between these two levels. Okay, anyways, so the first, this is the daily candle. Yes, the daily candle, a very thin candle, 0.06% only. This means that, and just before the the previous candle to that, that was on 22nd of November, a very small candle, again two small candles. Closing of both of the candles below the trend line indicates that whatever bullish movement, momentum, or sentiments, or whatever bullish is there, it is very normal, very low, or below normal, not normal, below normal or low. Okay, and as of now looks like that the market, the stock market, S&P 500, okay, it just want to take a break. Okay, so last 2 days, but not 2 days, but 3 days. Okay, so there was not any significant movement. Okay, so this means that this the last closing, it does not confirm any gap up or gap down open. However, if we consider these are two rejections, okay, these are the two rejection, in that case, yes, a gap down open condition, kind of gap down open condition. Okay, it comes. However, I cannot confirm the gap down open because of these extremely heavy bullish sentiments. But if there will not be any gap down open, then in that case again there will be, a limited movement. Whatever movement it will be there, it will be limited movement. However, if there comes a reversal, then that can be heavy. Okay, but for this, the heavy movement, there is a condition, the zone. Okay, anyways, let me tell you through the technicals. Through the technicals, everything is good. Okay, bullish, and also here also everything is bullish. The only problem is with the saturation, saturated here, okay, saturated. Before that, the stochastic RSI was saturated. It is still saturated, and now the RSI is also saturated. So when I say saturated, those who do not understand the meaning of saturation, okay, so you can think of the saturation as overbought condition. So as of now, the entire US stock market is in the overbought condition. Simple. And when I say saturation in the bearish side, okay, on this day, okay, I predicted, so on this particular day, okay, on this the Friday, I predicted a reversal, that there will be a reversal. Why? Because there was a saturation, and this was only first day of saturation. Okay, so I predicted this the reversal, and it was there. So when the saturation is seen in the bull side, this means overbought. When the saturation is seen in the bear side or the bearish side, then this means oversold. Okay, this thing. So I hope this thing is clear, the overbought or the oversold condition. Okay, as of now, the saturation is there in the entire US stock market, including this, the Dow Jones. Okay, we can clearly see Dow Jones. Okay, so as you are aware of that, I gave these the daily updates, the daily analysis to my Patreon community members, okay, of the S&P 500, and sometimes I also include the Dow Jones. Okay, so every day I give these the updates, as well as the stock market opportunities in the premium stocks of the US stock market. And for that, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page. This is my Patreon profile. And here I have these the two levels that are there. Okay, so as such, there is no difference in these two levels. The only difference is the geographical location. Okay, this one is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. And when you subscribe to either of these, then you will be getting the daily S&P 500 analysis updates and probable movement, as well as the stock market opportunities in the premium stocks of the US stock market. And if you notice that many people have joined my Patreon community for last many days, weeks, months, more than a year, and they are getting these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks every week. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section, and you can use that link to join my Patreon community. Now guys, I'm going to discuss the last point of the agenda of this S&P 500 weekly technical analysis. And in this, the fourth point of the agenda, I'm going to discuss the probable movement of the entire US stock market, not just S&P 500, but also Dow Jones, Nasdaq, and everything you can consider, okay, through the S&P 500, because I will cover the S&P 500 and the Dow Jones, and these two are the prime indices, okay, and they represent this the entire US stock market, okay. Now before that, you must understand a few things. So first thing is that on Monday there will be some new home sales data that will be there, okay, new home sales data that will be there, okay, although it is not expected to impact heavily the stock market, okay, but there will be some impact, some, okay. And if the stock market or if the market want to neglect the data, that then in that case it can, okay. However, on Wednesday there will be the GDP data. It will be published, the GDP data, okay, it will be published. And because the Wall Street is expecting, okay, or Wall Street is extremely bullish on GDP, whereas the Federal Reserve, not just chairman, Federal Reserve chairman, but the central bank, we can say that the central bank is bearish on the GDP, okay. Wall Street is bullish on the GDP, okay. So they are thinking differently, okay, in the opposite direction. And you can see that the extremely heavy bullish movement was because of that the Wall Street was, okay, it was thinking against the Federal Reserve, the central bank, okay. Anyways, we know that who runs the economy, okay, and who runs the stock market, and who is responsible for that, okay. Third point, the point number 3 is on Thursday. Yes, Thursday will be important, or very, very important, okay. If there means Thursday is the day when we can see either another, okay, heavy bullish push or a heavy decline in the entire US stock market. Why? Because on Thursday the PCE data and the core PCE data will be published, okay, personal consumption expenditure or the core personal consumption expenditure data, okay. After the CPI data, this is the second most, okay, important data. So the Feds, they consider the core CPI and the PC and the core PC, okay, when means primarily these are the two, okay, most important, okay, data that we know, okay. And I think last month when the data was published, then the stock market gave opposite movement. I think that was in the bullish direction maybe, okay. So last month the Feds, the Wall Street has simply neglected, okay, in some form the core PC data, okay. But then after 2 or 3 days the stock market, okay, it gave up, and it gave up heavily. Anyways, through these kind of comments, okay, I have already informed my Patreon community members, okay, that when they should be careful, when they should be extremely careful, and when they can trade normally, and what is happening and what is not happening, and what they don't want to tell you, etc. Okay. So once the data is published, okay, so I will analyze as usual each and every day this the data, Monday, okay, Wednesday and Thursday, particularly Thursday, okay, and I will give you an update that what now we are expecting, whether another bullish movement, continuation of the bullish movement, or the heavy decline, okay, or what will be there. So this will be very much clear, okay, on Thursday. Now point number 4, the Fed chairman is going to speak on Friday. It will be Friday, okay. So the PC data will be published on Thursday. The Fed chairman will be speaking on Friday. This means that if there comes no movement on Thursday, then the movement will be seen in the entire US stock market on Friday, okay, when the Fed chairman will speak, okay. So we will see, okay, how, so means the next week will be a very volatile, very interesting, some unexpected movements will be seen. And the zone that I am okay, that I mentioned here, 4527/37, This zone can be breached because of this heavily volatile movement. This is trend line for the rejection. This is the first valid point, trend line itself valid, and the very heavy point, okay, for the rejection. Number two is that if you notice that on the daily chart, it is in the S&P 500, not just S&P 500 but also the Dow Jones. Both of these are in the overbought condition. Overbought condition. Okay. Number three, both of these indices are trading at the saturation. What? Saturation. Okay. These are the three technical, three valid reasons. Number four, that this is the natural flow of the stock market. However, recently the stock market has missed its natural flow. Okay. So it will correct itself. I'm not saying there will be very extremely heavy fall. I'm simply saying there will be a reversal. This reversal might be like 2%, 1.5%, 3%. Okay. So reversal, okay, it will depend on, multiple factors. And that now, because of this kind of closing, there is a 90% probability of a reversal. Okay. So now I have given you all of the technical reasons and each and everything. Okay. That is there. If there comes any non-technical movement, then that is different, because this is something that we do not control, because for a non-technical, illogical, manipulated movement, okay, billions of dollars are needed. Okay. Which only few have, okay, this much of money. If, because the Dow Jones, okay, it failed to hit its trend line, okay, its absolute trend line, okay, this is the trend line number on Friday, although it is not mandatory. Okay. However, still if there comes more bullish movement, in that case what will happen? In that case the Dow Jones will hit its trend line. Okay. S&P 500 is also at its trend line, okay, missed by 2 points. It is already there. Then what will be most important here on Monday? On Monday, the most important part will be the closing. The closing on Monday. Because if there comes a closing, in this S&P 500 case, it will be the third closing. If there will be the third closing, if this closing again comes below this trend line, on the Monday it will be somewhere, it will be again almost 4562 or 4561. If there comes another closing that is below that trend line on Monday, okay, and the same must be there in the Dow Jones. Both of the indices must close below. Okay. Or if any of the indices, Dow Jones or the S&P 500, closes below that trend line, okay, in that case also, okay, this the following condition will be seen. What condition? Condition for the reversal will be seen. Simple. Now, what will be the condition that can help these indices to sustain and to move up further? The condition will be another closing above the trend line. This closing must be seen in both of the indices. There is no if and buts. This is a plain and simple condition. Both of the indices, Dow Jones as well as S&P 500, must give a proper closing above the trend line. That's it. If one index gives a closing above the trend line, then no. Okay, both of the indices must give a proper closing above the trend line. Simple. If that happens, okay, although technically that is not supported, right, but if that happens, and that can happen because see, they have given an unnatural movement to the stock market. Okay, these are market movers, market manipulators. Okay, so they can still give some more, this is a bullish movement, or simply on Monday they can give a gap up open, so that will also fulfill this the condition. Okay, after gap up, whether it comes down or moves up, that will depend. In that case, we will have to see whether there will be profit booking or not. And guys, remember that the profit booking is confirmed only when the first hourly candle has formed. And I have given this to my to all of my members, okay, regarding terminology, and I've used the profit booking on Monday if there comes a gap up open and if the similar conditions are seen. Okay, these the profit booking conditions are seen in this particular manner. Okay, first hourly candle will confirm whether it is happening or not. Okay, in that case we can see whether the profit booking is happening or not. And if the profit booking will be seen on Monday, in that case the S&P 500 will be having valid chances to breach the 452737 support zone. Okay, Now, if both of the indices S&P 500 and Dow Jones sustain above the trend line on Monday, in that case we can expect that the S&P 500 is not going to give up until something significant happens. What that significant thing will be? It will be Wednesday. And if not on Wednesday, then Thursday. The PCE or the core PCE data will be published. Not on Thursday, then Friday, when the Federal Reserve Chairman will speak. As simple as that. Okay. However, you must remember one more thing. If there comes two consecutive or two successive closings above the trend line in both of the indices, Dow Jones and the S&P 500, remember, two successive means Monday, Tuesday. Okay, two successive means Monday and Tuesday. Specifically, it must happen on Monday and Tuesday. Must. I'm not talking about any other day. Monday and Tuesday it must happen. Okay. Only and only if it happens on Monday and Tuesday, there comes two consecutive closings above this the trend line. In that case, the stock market has further more tech, even though it is manipulated, even though it is saturated, even though it is overbought. A lot of things are against the stock market, but there will be one thing that will be supportive to the bullish movement. That will be because there are two consecutive closings above the trend line. Means the stock market, if it fails to move up further, then it can sustain, and the chances of reversal or the bearish movement will be very limited. However, if there comes a fall on Monday, and if the Dow Jones and the S&P 500, both of these the indices closes below the trend line, in that case we do not need any other logical or illogical reason. In that case, only and only the manipulation. Even in the current case, the current case also, the manipulation only the manipulation can help it to move up and to sustain. Otherwise, no. But if there comes a closing below the trend line on Monday in both of these indices, then 100%, 200, 500% manipulation can help the S&P 500 and the Dow Jones to sustain. Otherwise, no power in the world technically or logically has this kind of means can help the S&P 500 and the Dow Jones to sustain. I'm not talking about bullish. Bullish is a different thing, but I'm talking about the sustain. Okay, because technically, okay, or logically, it will be forced or it will be compelled to give up, and to give up heavily, right? So Monday, Tuesday, and only Monday, a rejection on Monday, okay, or a sustained movement on Monday and Tuesday, okay, above or below these kind of conditions. And I will more clear these the conditions in my updates if you are my Patreon community members, okay, on Monday and Tuesday. One more thing we must not forget, that is the S&P 500 as of now on the weekly chart is expected to hit the saturation through the stochastic RSI. This is very, very important, because if this happens, in that case even the manipulators won't be able to hold this S&P 500 or the market. They may be able to hold for a day, two or so, but in that case, no. In that case, it will be heavily susceptible for a fall, an immediate fall. Immediate fall means a gap down open, and this the movement means this kind of back to back, okay, this kind of fall that will be there because of the saturation. Saturation I can confirm only on Monday once the stock market comes into the session. Okay. Now let's talk about the conditions, okay, more bullish movement and the levels, the bullish movement and the bearish movement. So what we know about this, the bullish or bearish movement, that if there comes a bullish movement, okay, any bullish movement for now, again the same, the continuation of the illogical movement, okay. The high of this candle was 4607. Any bullish movement will be restricted to 4607. That's it, okay, at most. More bullish movement can come only and only if the S&P 500 sustains above 4607. However, last week also I mentioned this thing, okay, that because there was a sharp, okay, this illogical or unnatural movement in the stock market, this means that now any further bullish movement will be limited or will be very limited. And last week you have seen that the S&P 500 moved up only by 1%. That's it, okay. So that this is what I mentioned. As of now, a continuous straight line movement, that is not supported. A reversal and then a bullish movement, that is supported. That is fine, not a problem. Okay. So bullish movement, okay, 4607 continuously and above 4607, okay. But again, the natural flow of the stock market must be followed. For example, okay, if you see that recently also, okay, when the S&P 500 was moving up, okay, yeah, we have seen moved up, came down, moved up, came down. So it has sustained some, then again, okay, for a few days it was here, moved up, came down, okay, then slowly it moved up, sustained here, moved up sharply, gave a reversal, moved up, gave a reversal, moved up, and then reversal. Okay, so this movement can be accepted, not a problem. Okay, however, with the current movement, the problem is that it moved up, it continuously moved up, moved up, moved up. Only one day, okay, it sustained, and then again moving up, moving up, moving up. Okay, and you can compare this movement with this movement. Why this movement was sustainable and why it moved up, okay, this much, and why this movement is not sustainable. Okay, but for any bullish movement to happen or a movement to for this 4607, we need two consecutive closings above the trend line, otherwise no. Intraday, if it wants that it gives a extremely heavy bullish movement, illogical, heavily manipulated movement, then also it is possible that it can move up to 4607. Okay. Now let's talk about the bearish movement or the reversal. Bearish movement or the reversal, okay, again 4527/37 is the zone. So this means that no fall, no reversal, no bearish trend, nothing bearish will be seen or will happen until and unless 452737. Okay, until and unless S&P 500 gives a proper closing below the zone. This means that as of now we are anticipating a reversal. Yes, the reversal can happen. Okay, but that reversal will be up to what? That reversal will be up to the zone 4527/37. A fall, okay, or any kind of fall or any kind of bearish movement or any kind of bearish in nature will come or will be seen in the S&P 500 or in the entire US stock market only and only if there comes a sustained movement below 4527/37 or a confirmed closing below the zone. When that happens, then there will be more reversal. So where exactly this reversal will be heading to? Okay, if we use this, the Fibonacci retracement from this level to the high of this level, okay, then it comes like somewhere around here, that is 4300, but comfortably we can say 4400, we can say. Okay, so technically yes, technically 4400, or even if you look into the high of this candle, that was 4393. So technically a valid reason, okay, 4393, 4400, okay, at most you can say that any bearish reversal, I'm not saying bearish trend, I'm saying bearish reversal. Okay, the trend is bullish, no doubt. Okay, bearish reversal, it will be up to 4400. However, if the S&P 500 spends more time or takes more time to come to 4400, comes down slowly and takes more time, in that case the technicals might change, and if the technicals change, okay, then only I'll be able to confirm whether the trend has changed or not. Because once that trend will change, then everything will go bearish. Because recently we have seen the bearish trend and it moved up, fall, it moved up, fall. In that case, that kind of movement will be seen. Okay, so 452737 below that, okay, if it means whenever it comes down, it has the reasons to come down to 4400. And anyways, whatever it will be happening, whether it will be coming down to 4400, other than that we also have some more levels here. Okay, so that I will confirm, so that everything I will confirm, okay, through these updates, the daily updates to my Patreon community members. And if you are not my Patreon community member, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section, right? So now guys, we have discussed the closing above the trend line, closing below the trend line, one closing above and one closing below the trend line, further bullish movement to what level, in what, and what is the natural flow of the stock market, what is not the natural flow of the stock market, why we are anticipating the reversal, to what levels actually it can come, and what must be there in order to confirm that whether the S&P 500 will fall or not. Okay, once again guys, 4400 is the tentative bearish reversal level. The S&P 500 may hit 4,400 exactly, or may not. It can even take, okay, or it can even get a reversal in between, because there are other important levels, okay, here. So that I give in my pre-market update, okay, every day before the open of the stock market to my Patreon community members. And in the subsequent updates, okay, I discuss this thing in detail, very clearly, the conditions, okay. And yes, there are also chances that the S&P 500 can even breach 4,400, then to what? To the 200-day EMA. Okay, so there are many levels, support levels, okay, that the S&P 500 is going to get, okay, when it comes down, okay. Although, but one thing will be there, okay, it is the bullish trend. It is the bullish trend. There will not be any change in the bullish trend until the technicals change into the bearish side. Technicals will change only when there comes, you know, back-to-back fall. It remain continuously for 5-6 days, for 1 week or so, for more than 1 week, okay, then only we can say that the trend is changing. Otherwise, we are anticipating a bearish reversal in the bullish trend. This means that as of now, okay, in simple words, okay, the stock market is bullish, okay, there will be a reversal, and then, okay, this kind of movement. This is the bullish trend, okay, like this. See, this was the bearish movement. It came down, a reversal, and then again a bearish movement. In the bullish term, okay, there reversal, and then this is the natural flow of the stock market, and this is how it should work, okay. Nothing comes down in a straight line, nothing goes up in a straight line. If this happens, then it is highly unstable, okay, because eventually it will align itself, okay, in this kind of movement, no matter what, okay. This is 100% true, okay. So now bearish reversal, it is not a change of trend. Change of trend, whenever it will happen, okay, I will update you through these updates, my Patreon community members. And if it happens, okay, by the end of the week, then in the weekly technical analysis. And guys, once again, let me remind you that there are these 30% plus 10% equal to 40% returns, okay, only until November 30th, that is Thursday, okay. I think 4-5 days are left only, okay. And this, and the minimum capital, okay, it must be $500,000, and then you can get the 40% returns in 1 year. I've given the link to this program in the description of the video and also in the comment section. So if you want to participate in the S&P 500 or the stock market knowledge transfer program, flat 20% off, flat 20% discount. This is valid until the same November 30th, 2023. Okay, that is Thursday. 5 days from now, 4-5 days from now, okay. So this is there, and again the link is there in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get these daily updates, the daily analysis of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the next week, that is the week of November 27th. That is from November 27th, which is Monday, to December 1st, that will be Friday.